Mic check and screen share check, please. Okay, awesome. Good night. It's Sunday, August 14th, 2022, Nightly Strategy Podcast for Sunday. I just want to clean up the battlefield a little bit here. There was a question from Sarab, says, could somebody please point me to the criteria that comprises the collapsing dragon setup? What I want you to do is go to the search box and type the words collapsing dragon. These are all the references to collapsing dragon over the last 7 or 8 years. And you'll see pictures of there's one, the collapsing dragon pattern. All right, so here's the collapsing dragon pattern. Don't make it harder than it is. This one, the collapsing dragon happens when you have a peak in the dragon. We also count the RL10 as a peak too. And then you have a sell-off, and you have the belly of the dragon or the belly of the RL10, either one of these. It rolls over again, and you have a lower high. And the collapsing dragon consists either, your choice. The first entry is if you draw a line straight across from the dragon and price violates through there, that's the collapsing dragon entry. The second one is if you want to use the RL10, that's the collapsing dragon entry. The stop is the peak of the dragon or the RL10. That's all it is. This collapses so fast, so far, that you'll be in agreement with me that it's our favorite pattern. All right, that's the collapsing dragon. If you go to all of these discussions, every one of these is a discussion about the collapsing dragon. The little symbols that have like a PNG or something, these are all case studies where people have posted examples of their collapsing dragons. So you'll find that to be helpful. Okay. Search is your friend. It's also in the glossary. Let's see what to do. Okay, so we're going to take a look at Chi-Wing Chong's sector analysis here with the RL30 Z-score slopes. And we see that the S&P, led by tech, is above 2.0 and looking strong. Finance in close support. Materials are doing really well. Even energy has worked its way up. So the leadership is where you want it. You want to see tech leading the way there. So that's all good. And we just went into sideways quiet. So that's further good news. Inside the comparison of XLY, which is consumer discretionary, that's also leading SPY up, and the defensive plays of the staples are lagging. This is typical of growth phase inside the market. So everything is pointing to yes. Go through a series of Ken H's frames. The first thing I want to do, though, is I want to show you a study we did. We talked about an example this morning using the 30-minute PSAR. We're calling this the fractal PSAR. So this is a 30-minute chart. And notice that the PSAR flip and the PSAR box. So that is about that was about 30 cents back here, maybe 40 cents. And here it's basically the same thing. It's also about, call it 50 cents with a trigger at 80. In our model, if this were to find support here and come through the PSAR at 80, we would take that as a signal to go long with about a 50-cent risk box, since that's the buffer that keeps this from being a downward trend. And we know that these trends can last a long time. So if you know where that is on the 30-minute, and then you zoom down to the 3-minute, it turns out that this red box here is that same 50-cent risk box that you saw on the 30-minute. And I want you to know that the price level that suggested the upward trend was possible happens at that key level, which is also the peak of the RL10 over here because of math. Then I want you to notice that on the 3-minute chart, here's the open, this harsh sell-off into the winter, this at 1 would be an SSC entry. Harsh winter, RL10 reverses, crosses the baby dragon, goes through the dragon, hits the PSAR and flips. That's an SSC pattern. This little wiggle and continue at 2 is a Kata 2 pattern. That pattern worked all the way through here, and now you got a series of rising Kata 2s, which is why you should be interested in the Kata 2 pattern. But the point I want to make here is that the PSAR, the fractal PSAR, is really important, that you should know where the tripwire for a signal of a trend on the higher time frame kicks in, so that when you're doing your tactical trades and you see that kind of a move, you can now say, well, you have reason to believe that the higher time frames are going to start adding to this position because the trend just flipped on their time frame. And this is where the shorter time frame gives you an opportunity to front run that at a crucial period in which you have this much wiggle room to get in front of what could be a really strong move. And even with a 50-cent risk box, this was a 2-hour trade. And if you're using the 20-cent risk box, this is about, if you add both of those and a third position, that's about 6 to 7 R on the lithium trade that we did as the sniper trade of the day last Friday. So fractal PSAR is your friend. We talked about that extensively during the Creativity 202 story circle this morning, among other tactical insights that are proven to be pretty valuable. We talked about, for example, this flashcard, which is a artist's rendition of the emotional state that we find ourselves in when we are framing a trade in the usual way with our minimum manageable risk box with a 3R potential and looking to get to no lose plus dinner for 2 as soon as we can, and then conceptually thinking about all the people who are not in that trade that might want to be in that trade. And so you have to recognize that by getting in early, there's a potential, not a certainty, of these people adding to that position as it's going up. And then at some point, this trade will succeed to the point where, based on price action, there's people in that trade that want to get out. And so this tug of war, it's like an inverse tug of war. These guys are pushing it up, these guys are pushing it down. And so you have some kind of pathway for that trade to unfold in. And your only job is to find those moments when you can frame a 2-to-1 reward to risk, get your risk out, and then learn to treat this as a disinterested science project, and then simply manage the trade according to rules, and then tabulate the results. So we talked about that mindset this morning. We went a little deeper because the lesson was actually an experiential learning exercise in which we were taking a look at a little more precise definition of how to draw the price box and risk box and treat it as a noise box, determine if it's manageable, see what side, and then put that after the open on some recognized consolidation area with a stop and a breakout, and then getting to no lose plus dinner for two, and then learning how to lock in gains with exit management, and then using the concept of the R10, which is 1/10 of the range stat, in order to manage the available reasonable trade each day as a professional trader. This is what we call visual box trading, or trade framing with trade geometry, and using a minimal indicator set that is robust to all systems. The narration of that in the creativity lesson was well received by the team. They said it was the best description of it they had heard me give yet. So just repetition breeds skill. All right, back to our schedule. So the reason I spend the time talking about the 30 was Ken Hum's work with these weekly, daily, and hourly. Sometimes he uses the 30, but you get a real sense of the fractal nature and how you can use the fractal patterns to set up your nice trades inside here. And what he's got here is a continuation pattern in new core steel. Here was the SSC. There's an emerging dragon. It has now cleared the hump, and that thing is getting ready to move to 155. And he's got a good second position in here with the risk capital contributed by the gains from the first. He's identified a support level and a support level, and is ready to, I think, add even another position here if it breaks above 145. I think that's entirely within reason. And when we look at the weekly, there's still clear room to go to about 165. This is not much resistance at all. The real resistance doesn't occur until up about right in this area. So that has potential for a nice strong move. The metals are on the move. US Steel, same position, same trade. Gets a nice, this is a Kata 2 entry, a low, a higher low. He buys it above the resistance. There was a second entry available there. He does get the second entry here. And this one is already well in the money on the second position, and he's just going to lock it in at 24.50. So what I really like about US Steel is how much room it really has to go up to 37. It just has to get through this. Once it can get through that, and it's almost through there, that's going to go fast until it gets to 30. That's one to play hard this week. Devon Energy, he had one scratch on that one, and then played the rebound intraday. That's this one, the Kata 2, or that's this one. And then here's the SSC, I should say. And he's deep in the money on that one and locked in at 63.50. What was once resistance should now be support. So there's no reason to let it fall back below that. So that's a great place to put your exit. Natural gas. Boy, that's as nice as can be. He played on this one. He played the gap up and then started to fail. So he just cashed it. Well done. Saw the double bottom, gets a Kata 2 and an emerging dragon. Good to go. He's got it locked in right here, ready to add another position if it breaks above there. That's good. Looks good. Crushing it. The triple Qs. He's been playing this one in pieces on the way up. You know, he's got this one. He tried a second position, quickly got out of it, so he made bank on that one. There was an SSC. He didn't take it. He didn't take the Kata 2 because it was so close to resistance, but he did play the emerging dragon, got paid. Tried a short, stopped and reversed here, and that one's deep in the money. He gets the second position on the emerging dragon. He put 2 positions on that one. Nice. And he's now raised his stop to here. That's looking good. You know, next stop on that is 350. Here's the resistance. That thing closed so well. That has every possibility of doing good. Ethereum has had a nice little rebound here. This is just barely a Kata 2. And of course, we're always interested in it because of the potential for those kinds of move. And so that's early recovering. So he got paid, quick loss, 2 positions that are paid for and going. That's good shape. I love this re-entry here when it cleared the RL10 and then the second position, well postured to gain. There's only one little piece of resistance right here around 17. That's not resistance, and there's no resistance here. So if it can get through 17, this thing can get to 20 pretty nicely. So wouldn't be surprised to see that continue to gain. Feels like it's back. Bruised, but back. The Bitcoin futures, boy, that's hard to trade on a daily, but you know, you sort of got to respect the healing process of rising lows like he has here. And he's got one position here, like on that, a low, a higher low. He took the second Kata 2 and has let that just unfold in his direction. I think my stop would be at 14 to give this room to breathe and go, but we're about at a really key triple top right here. It's got to get through 15 and go. So you're giving it about a 6% wiggle room. That's got real potential. I like it. Shockwave Medical. Of course, we would have loved to have had that one a little earlier, but still, this thing is free and clear up here at 280. It's left all of this behind, and there's no resistance overhead, and he's got a nice position in at 270, and it's at 290. So that's about a 270 to 290 is $20. So that's about a 13% gain in hand, and he just wants to keep half of it and give that thing room to go. That looks good. Breakout from consolidation. Nice find. Clearfield Inc., technology sector, communications. This is basically that same pattern. Of course, we would love to have had the SSC or the Kata 2 or the emerging dragon or the Kata 2 or the Kata 2, but you get them when you get them. And this one is slightly in the money. I think I'd have my stop here. I'd like to keep, I don't want to lose money on that one. And this is so far above its previous support levels that has, who owns that right now that wants to sell it? Nobody. That's a keeper. Brazil, this is a frame. Doesn't look like he has a position. This has been trading so nicely intraday. I like the Kata 2 action. And then this breakout, there is a large empty space right here where the gap was from 34 down. So there's no resistance in here whatsoever. So once this crosses, there's nobody in here that's now motivated to sell until it at least gets up to 34 and 35.5. So I'd hold my nose and buy it. I would play it primarily intraday and then keep 20% of the position as a swing. But what we really want to see is what happens at the test at 35.50 if it gets that far. Because if it can get through that, it's back in town, and then 38 is in play. But you can see why the hourly charts, the SSC entries, the COTA 2s, why those should be of interest to you. That longer term time frame sets you up for some nice intraday trading. Sun Power. This is benefiting from PBW. Really strong support all the way through here around 16. It has cleared the resistance at 23, which was here. And it's good to go. Again, we'd like to have had that a little sooner, like with the COTA 2s. But, you know, there's plenty of room in this thing. It wants to go to 50. It wants to go to 33 first. So that's your first leg. Second position in here going up. Looks good. And I also think you could play it short from 25.50. As people try to, if there's nobody that comes in to buy it and it starts failing and they want to sell to preserve their profit, you could see that tumble as fast as it went up. Walt Dismal, amazing earnings, really had a big breakout, had an inside day. So this one is, I'm cautious on this one. I think if it fails below here, it's coming back because it's run up so fast. The next resistance, though, is in this area around 132. So if it does break above that 2-day high, then that you would think of that as buying pressure. That's going to take it up to 133. So I'd start intraday and try to make a winning position intraday and then hold a piece overnight. Only because we're late to the game on that one. United Health has been very, very strong in the Dow, but it's right at a consolidation area, and there was little buying appetite at that fully valued price. So to me, a return to those price levels at 515 and 495 would not be unusual. I don't see it getting out of this trading range for a while. This would be a low priority for me. I just think it's vulnerable. AT&T, this reaction to earnings here may have created a, buy on dip opportunity. It may want to get back up into here. I don't mind risking, 50 cents on it to see if that'll work. I also don't mind getting short if it falls below 18. That thing's vulnerable to short swings, and it actually moves pretty good distances when it does move on those buying breakouts. So yeah, this thing could, if it moved $2 in my favor, I'd really be tempted just to cash it and raise some capital. That's a pure trader to me. Walmart, there was his entry. He recognizes he should have exited here. At this point, when we talked last week, he was just going to leave the stop in here. It rewarded him, got him back in. Now he has learned his lesson, has moved his stop back up into here to lock in that gain. And I think that if it gets above here, that has every reason to go. And with the strength that we saw last week and moving into sideways, I think there's money coming into the market, and there's value buyers. Long-term value players are going to look at that as an opportunity to buy Walmart. It's still on sale at the bottom of what was its trading range between 130 and 150. So I still think there's a chance to get it on sale. I still think there's buying pressure on it. This is Constantine. And he's working the DAX on 5 minutes, sees the support levels, buys the breakout above the emerging dragon, adds a position, and then makes, let me see here. and makes about 1, 2, 3, 4. Makes about 4R on that one. And what he noticed is when he was looking at the higher support levels, and this reinforces our point about the PSAR from the higher levels gives you clear indications when trends change. And that move right there is the move that he was able to tap into for about 5 or 6R on the shorter time frame. So this notion of the fractal PSARs and fractal MACDs is an important discussion. Here's Luke looking quickly now at the 5-minute Aussie, looking at higher time frames of daily, 8-hour and 1 hour, and a real tight range last couple days. So those two breakout levels are very promising. And if it can break north of this, it's going to run up to this one pretty nicely. So he's got to be ready. And then the breakdown from there can be equally large. And if this one breaks, watch it come back all the way to here. So this is really postured for an explosive breakout starting tomorrow. So we'll be looking forward to that with interest. I see Arch looking at that too. All right, that's everything I've got for tonight. We'll get this published and posted. For the creativity folks that are listening, we've got the this morning session that was excellent. It was almost 2 hours posted in the workshop on Rizuku. So all right, guys, we shall see you tomorrow.